This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora, and welcome to Wednesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news the Bank of Japan will grab the headlines later in the afternoon. But first up, there was another dairy auction event overnight, the shorter pulse event of skim milk powder and whole milk powder only. This one delivered results very little changed from the prior event last week, essentially locking in those earlier price dips. In the US, retail sales at physical stores rose 4.5% last week from a year ago, the smallest rise since March, but at least are still well better than inflation. Meanwhile, job openings in June were little changed from the prior months, but that is better than it sounds because May was revised higher. Both levels are better than analysts had expected. And their quit rate fell to its lowest since November 2020. And remember, we get the July US non-farm payrolls data this Saturday, and markets now expect 175,000 gain. There is nothing in the JOLTS data today to suggest this is at risk, if anything, perhaps an upside chance. And perhaps supporting that is the widely watched Conference Board survey of consumer sentiment, which rose in July by more than expected. However, this survey shows that consumers are less upbeat about the present than they are about the future. Election jitters are in play now, but despite all the overall gains, these levels in the survey are still quite low. And there was a follow-up from the US oil patch. The Dallas Fed Services Sector Survey came in much less negative in July than June, and much less negative than their factory survey. And later today we'll get the Bank of Japan monetary policy decisions. Most analysts see them holding at a 0.1% policy rate, but a growing cohort see it rise to 0.25% today as wages and inflation rise there. Also of interest is what they will do with their bond buying program. It would not be a surprise if they signal they will be reducing it from about $65 billion a month to about half that. And now we can report the June foreign direct investment data for China, and no wonder they held it back. It was terrible. They attracted only a net 1.6 million yuan in June. That was their worst level ever. In June 2023, it was a worryingly low 13.6 billion yuan. In June 2022, it was 24.2 billion yuan. In New Zealand dollars, these June inflows were virtually nothing, 350,000 New Zealand dollars. Even for New Zealand, that would be very low. For the world's second largest economy, it is a stunningly negative result. Beijing will be worried that these flows have dried up. Now their worry is that a net outflow by foreign investors beckons. We have noted this recently, but it is worth updating again. The fall in Chinese steel rebar prices is turning into a rout with sharp daily drops now. They are now at 8-year lows. It's hard to see where this will end. In Europe, their second quarter 2024 GDP expansion came in low again, but a 0.7% gain from the same period a year ago, similar to the first quarter gain, but slightly better than expected. Expansions in Spain and France drove this result, but it was lagging in Germany. Meanwhile, German CPI inflation rose a very modest 2.3% in July, 2.6% on an EU harmonised basis. This was little change from June. In Australia, they are waiting for their second quarter CPI data to be released later today. Markets expect that to come in at 3.8% and up from 3.6% in the first quarter. And they will release the June month inflation indicator at the same time, where a 3.8% rate is expected, down from 4% in May. This data will go a long way to setting the RBA stance expectations for their Tuesday, August 6 MPS review. Meanwhile, Australian building consent levels for June came in weak, led by low apartment and townhouse construction intentions. In fact, the levels for these dwellings that are not standalone houses are now down to levels last seen in 2011. Over the past 12 months, there's been a total of 163,000 dwellings approved, compared with 178,000 in the 12 months prior, representing an 8.5% decrease. The US Treasury 10-year yield is now at 4.14% and down another 3 basis points from yesterday. But the price of gold will start today up $28 at $2,406 an ounce. and oil prices are almost $1 lower at just over $74.50 a barrel in the US, while the international Brent price is just under $78.50 a barrel. And the Kiwi dollar starts today 20 basis points firmer at 59 US cents. Against the Aussie, we're 40 basis points higher at 90.2 Australian cents. Against the euro, we're up 30 basis points at 54.6 euro cents. That all means our trade-weighted index starts today at 68.1 and up 30 basis points from yesterday. And the Bitcoin price starts today at $65,882 and down $1,000 or 1.6% from this time yesterday. Volatility over the past 24 hours has been modest at plus or minus 1.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.